So this is an agenda about climate and insurance. And at COP29 in Baku, Azerbaijan, we were able to launch the first ever global guide on transition plans for insurers. And we're just going to use this opportunity to promote what we launched at COP29 because of its relevance to the climate agenda. Again, we already had that master narrative. One of the things that I wanted to share with you is the concept of mitigation and adaptation. And more often than not, if you attend COPs or even events, people tend to either gravitate towards an adaptation narrative or a mitigation narrative. But if you really look at it from a risk reduction lens, these two are actually very compatible and absolutely make sense. So greenhouse gas mitigation is actually risk reduction at source. And since we need to cope with the physical impacts of climate change, we need to adapt to it. So the more we mitigate, the more we adapt, the less climate-related losses and damages that we have to bear with. And the less we mitigate and the less we adapt, the more that we can expect climate-related losses. So from a risk reduction perspective, it absolutely makes sense to be able to reduce greenhouse gas emissions, at the same time build our, adapt and build our resilience to the impacts of climate change. Earlier this year, we also launched a new forum, a multi-stakeholder forum called the Forum for Insurance Transition to Net Zero. And this is quite a different model from other initiatives that we've had at UNEP, because in this forum, we don't only have insurance market participants, we also have, actually, one of the regulators is here, Tomas Alay from Costa Rica. We have a group of insurance regulators and supervisors. We also have members of civil society and academia. WWF is part of it as well, and others. And we were able to create a new model that we believe is important in supporting scaling up the role of insurance in supporting a just transition to a resilient net zero economy. So as I mentioned, in addition to insurers, we also have key insurance supervisors and regulators at pretty much at the highest level. You can't go higher on insurance regulation in Costa Rica than Tomas. The same with Petra Hilkima, who's a chairperson of EIOPA. And they have embraced this model and this agenda as a consultative group of regulators and supervisors that we can engage in supporting the transition. Equally, in terms of civil society and academia, we have also created a very diverse group of folks from the academic and scientific community to support this agenda as well. And our priorities are quite clear. Same with the PSI Working Group for Nature earlier. We have set priorities on transition plans in terms of supporting the advancement of net zero insurance metrics and targets and frameworks related to that, how insurers engage with different sectors in the real economy on net zero, and how insurers can support the transition in terms of the opportunity set of climate technologies and solutions out there. And over time, we hope that this could also be a key contribution by the insurance industry towards increasing insurance and financial flows towards emissions, towards a net zero economy. In addition, in this new forum, we believe that our outputs shouldn't only be measured by guidance and reports. The agenda of net zero and climate action in net zero in particular for insurers is relatively new, and we believe that everyone in the forum has to be upskilled on emerging practices and thinking with respect to this agenda. So we believe that there is to be a continuous improvement needed to better understand this evolving practice of net zero insurance. And this led us to our priority this year, our priority this year, which is to produce the first global guide on transition plans for insurers. Because prior to this guide, again, it did not exist. Either you have transition plan guidance for a generic transition plan guidance applicable to corporates, or in the financial sector, as I mentioned earlier in the previous session, a lot of the guidance there are heavily oriented towards lending and investment and not insurance. So a snapshot of what this guide is, it really articulates what are the peculiarities of the insurance business. As we distinguished earlier, there's commercial and personal lines, non-life and life and health. There are different actors in the value chain, just like there are different actors in the investment value chain. And there are different levers, which some of which we touched on earlier, whether it's claims, setting your underwriting policy, what does engagement mean in this context, all the way to policy engagement in addition to client engagement. And in addition to that, this guide also wires in interconnected and climate-related issues such as nature and pollution. And I hope the previous session, for those who were here earlier, was able to articulate why these are relevant to the climate agenda and not simply a separate issue. There's also a growing agenda on transition plans there. If you are a company with a net zero commitment, you can show credibility by showing your transition plan. Regulation like the Corporate Sustainability Reporting Directive and other similar regulations in other markets are also creating disclosure requirements on transition plans to show what the climate risk profile of a company is, particularly in the context of investors and shareholders. And then there's a growing agenda of prudential requirement where the risk of misalignment with net zero targets could potentially impact the safety of soundness of financial institutions, including insurers, and how that also could impact on financial stability. So there are many reasons why transition plan is really an emerging agenda. And there have been efforts out there by the Glasgow Financial Alliance for Net Zero, the Transition Plan Task Force in the UK, the International Sustainability Standards Board. We have looked at that and are building on that rather than replicating it. And going further in terms of a disclosure framework, we have relied on the TPT disclosure framework. And as you see there, whatever implementation guidance is available at the moment doesn't include insurance at the moment, but there is guidance for asset owners and asset managers. So this is why the agenda for transition plan guidance for insurance has evolved, and we have a vision that a transition plan guidance for insurance companies should encompass both sides of the balance sheet, which has also been articulated earlier. And who are the users of these transition plans? It could be multiple users, it could be policymakers, it could be aligned to public policy on what needs to be done in order to enable a credible transition, whether it's also clients who are looking for new products or services from insurers, your own employees, all the way to prudential needs by regulators as well as investors and shareholders. So our immediate timetable is after this first global guide, we will go deeper into underwriting portfolios as a next step. And then hopefully by COP30, we will be able to complete this three-part project that will look at a total balance sheet approach guide for insurance companies. And last but not the least, I think there's a whole alphabet soup there on disclosure frameworks. We're also hoping that we can contribute to a more efficient way to develop and disclose transition plans, because there's a very strong argument being made that all of the different issues levers could be encapsulated in a single transition plan that's rooted to corporate strategy. And we have been engaging with EFRAG, what used to be known as the European Financial Reporting Advisory Group, the TPT, which is the resources are now part of the International Sustainable Standards Board. I'm part of the GRI Insurance Technical Committee as well, and others, so that we have a coherent and hopefully efficient approach to addressing transition plan guidance and supporting participants out there. So with that, let's go on with the panel. The one thing that I just wanted to end with the presentation is time horizons. I think more often than not, we talk about sustainability in different contexts. But this chart from the IPCC struck me because it really shows sustainable development in the way it was framed to be, which is development that meets the needs of the present without compromising the needs of future generations. So when we talk about climate adaptation, climate mitigation, we actually, in a true sense of it, have to look further than simply the here and now and look at also the concept of intergenerational equity. So with that, let's have our panel on stage. So we have Cirhan Truswell from Sun Life, who's hopefully has enough voice to share with us. Esther from a.s.r. in the Netherlands, and also João Mestre from Fidelidade in Portugal. Let's start with our Dutch friend, Esther, who's so active. She's involved in everything that UNEP is doing, be it on Insurance for Nature Positive or the Forum for Insurance Transition to Net Zero. I don't know where she's getting her energy and time out of her day job, but she's been a really strong advocate and participant in developing a lot of the things I've shared with you.
Well, thank you, Butch, for that compliment. It's important, so yeah. I don't have a life anymore, but I'm doing the best I can to save the world.
But tell us about a.s.r, on your strategy on climate action. I think we can start with mitigation, if you wish, and transition plans. What's the state of thinking at a.s.r on this agenda?
Yes, on transition plans, maybe good to go back a little on what you briefly touched already on the purpose of transition plans. Traditionally, a transition plan is a voluntary, multi-year, very detailed account of how, as an organization, you can adjust your business model and strategy to align with the with your environmental goals, if it's a climate transition plan. And we've seen in the last couple of years that governments are also, and that's the second purpose, are also requiring corporates to come up with a transition plan to disclose how they align their business model and also their strategy to align with governmental climate plans relating to the transition to net zero, and very recently, as an emerging third purpose, we also see that that regulators and supervisory bodies are mandating us to disclose on our risks related to transition to a net zero economy. So there are at least three purposes for transition plans. And at a.s.r, we try to, at the moment, we're currently in the process of making a transition plan, and we try to comply with all those purposes. So it's important for us to have a transition plan to help us out with determining how we're getting from our baseline value to our targets over the years, but also we want to comply with the climate plan of the Dutch government, as well as that we want to and need to, as we are in the first tranche of the CSRD, do it because of requirements from the CSRD. And so we're combining those purposes. It's helpful. It makes the whole everything we're doing at a.s.r. and have been doing for many years, it makes it more structured. It makes it more, when you start at looking at your impacts and your risks first, and then you align your policies and your actions and your targets, your levers with those impacts and risks, it becomes a narrative which we can work with. So for me, a transition plan is very helpful in actually getting to do what we need to do to advance and scale up our support of the transition.
So, is it fair to say that it's not just a glorified TCFD disclosure, right? Can I say that? That is different actually now?
It is, yes, definitely. Yeah, it's... Well, as Emily already said in the previous panel, TCFD was and is a risk management framework, but not only a risk management framework, and also a disclosure framework. But I think we've taken it a bit further now, a step further. And also with thanks to the CSRD, which has incorporated both the TCFD and the TNFD, we are now really stimulated to make it a structured strategy and business model of the whole organization. It's not it's not just the team, the sustainability team anymore working on sustainability and strategy and policies. It's the whole of the organization. Everyone is involved. Finance is involved. Compliance is involved. Legal affairs is involved. All the operational processes are involved. And that is one of the major advances, I think, of CSRD, that it's now of the whole organization. So that is, I think, a step further from TCFD.
Right. Thank you, Esther, for articulating that. And I know it's easier said than done, right?
It's a lot of work.
Let's move over to our colleague at Sun Life. What is the thinking at Sun Life on, you have a different, a.s.r. is a Dutch insurer. Their main markets are in the Netherlands and Europe. You're present globally. And so and it's very interesting to see what the thinking is Sun Life on climate action.
Absolutely, thank you, Butch. So just to give you an overview of Sun Life and who we are. So we're a life and health insurance company and also an asset manager. We are based in Canada. Our headquarters in Toronto. We're actually over 150 years old, so we're quite an established organisation within Canada. But we do have a global reach, so we have markets across Canada, the USA, and 7 different countries in Asia. So we do have a far reach. Client action is key for us to demonstrate our purpose, and there's 2 areas that we look at there. So our purpose is to help our clients achieve lifetime financial security and to live healthier lives. And so climate action is underpinned in both of those to enable us to reach that. I think it's fair to say that we're quite early on our climate transition planning journey. We are regulated by our Canadian regulator, OSFI, through their B15 climate risk management guideline to actually publish a transition plan. So we are working through that at the moment. It's heavily underpinned by science and high quality data. And essentially what that will map out is a roadmap to 2050. So what is our path to meet our interim and long-term net zero goals? But also underpinning that is ensuring that we are a climate resilience organisation, both now and into the future. So we really see that transition plan as being a key part of how we manage our long-term climate risks. My team have been doing a huge amount of work this year to really lay a strong foundation across the organisation. And so building on Esther's point about how it's a truly enterprise-wide approach, the first focus that we took was to embed climate risk into our enterprise risk management framework. So again, all the actors that you highlighted, so our actuary teams, corporate risk, operations, finance, and sustainability and climate, where our teams sit, played a key role in getting that over the line. We're now working on the next stages of that, so the risk appetite statement, so having a climate risk appetite statement, and then looking at our risk appetite policy and other policies and operating guidelines where we feel that climate risk is material, ensuring that climate risk is embedded across those policies. There's also the sort of climate scenario analysis piece. So obviously we are looking at the qualitative piece through the policy work, but then how do we actually measure and manage our climate risk? So we've done a few projects this year looking at climate scenario analysis to quantify in various areas of our business what those risk profiles will look like, and looking at embedding that into our short-term business and long-term strategy planning cycles as well. So we really feel that that's a strong foundation to build upon. But obviously the focus today is insurance, and so as a life and health insurer, we're just about to launch an ambitious climate and health strategy. And so that is going to be linked in with our long-term transition plan, but it's really understanding what is the nexus between climate and health, and how is climate change impacting our clients. We know it is impacting our clients, but we need to really get under the skin of, how is it impacting them, and what is that going to look like in the future.
Right, thank you for that. And it's great to hear that Sun Life is taking a very whole-of-organization approach to managing climate risk on your own, and also given the regulatory environment in Canada, it's the B15 guideline, if I'm not mistaken, right? So just to, I always try to seize the opportunity when there's a life and health insurer, because we don't talk about life and health underwriting portfolios so often, right? So I think on balance, if you look at the global life and health insurance industry, the sustainability journey generally has focused on the responsible investment agenda as long-term institutional investors, which is great, it's important. But I always say all insurers are investors, but not all investors are insurers. So on your health book, for example, are there some actions you're taking at Sun Life to actually support clients, be it on adaptation or mitigation?
Yeah, so our strategy is outlined into 3 different pillars. So the first one is looking at data, so really starting to drill down into where those impacts are for our clients, because if we can understand the risk, then we can start to bring in potentially new innovation, new products, new support for those specific areas. We're also looking at partnerships, so we realise that we can't do this work alone. So we're having conversations with academic institutions, experts in, for example, we're just about to launch a partnership with the Canadian Lung Association, which we're really excited about. So they're a leading expert in Canada on respiratory health. We are partnering with them and our Canadian e-pharmacy team. So we're looking at introducing digital action plans for some of our clients to better manage their asthma and pulmonary care symptoms. So linking that to the climate lens and being able to give them proactive action plans up front so that they can really proactively manage those symptoms before a climate hazard event hits. So that piece of work is starting next year. We're also working with them on a virtual pulmonary care pathway. So again, for those who are currently suffering from chronic long-term respiratory diseases, how can we partner with them to make sure that our clients can have that virtual journey without necessarily having access to primary healthcare, which we know is an issue in some of our areas, particularly where we've got underserved communities, remote communities, etc.
Yeah, it's great to hear that, because you're actually articulating some of the points. Last year, there was a PSI global study that was launched, Health is Our Greatest Wealth. And we were looking at a 4-point action plan by insurers on how they can actually help drive better health outcomes. So prevention is better than cure. And a lot of these things actually are very relevant in a health context, be it on pollution, etc. So thank you for sharing that. One last point that I'm just curious to ask you. I'm hearing more and more in more events about the role of life and health insurers and also reducing emissions, right? And there is this logic that if you are healthy and resilient, you then avoid carbon-intensive hospitalization medication that you can do. Has that been brought up in some of the this circles you've been in or discussions?
It's not something that we have built into our action plan right now. As I said, we're quite early on in this journey, but we're really looking to partner with other life and health insurers, with other people who are actually looking at this as a topic area, because we realise that there is the client impact piece, but absolutely to your point, Butch, that if we're really going to have a holistic transition plan, and it does include mitigation and adaptation, it has to be two sides of the coin. And I think, our presence here today, we've been engaging, and I can see a few of our colleagues in the audience from other life and health insurers, but we're really kind of putting out a plea to say we want to work with people who are considering this, because yes, we're competitors, but it's a public health threat ultimately, and we can't solve this problem alone, and we need all these actors and voices around the table.
Yeah, and it's fair to say, Esther, that you can apply that easily, that concept to non-life. So if you have a home that's resilient, yes, you can build back greener, but it's better not to build back at all if it's resilient, right?
Exactly that, Butch. We have a very particular situation, of course, in the Netherlands. We're a very low-lying country. We've got sea at two sides of our country. We've got some big rivers running through our country. So If anyone in Europe is confronted with climate change, it's us basically, and we see that every day in the Netherlands. We see that it's getting drier and warmer, that it's getting wetter, and that the sea levels are rising. So we're in big trouble basically. And what we in the Netherlands do is we work a lot with the Ministry of Infrastructure and Water Management. Actually, they have set up a very extensive program, which is called the Delta program, which focuses on protecting all the citizens of the Netherlands by building dams and barriers around all the rivers and the sea sides to protect us all from flooding. But they also focus on keeping water in at the same time. So that's important that they are focusing on that. And we, as an insurance company, or companies, as a financial sector actually, that we do cooperate with them, and that we also support them in their endeavors. And indeed, like you said, it's important, first of all, to look at, do we still want to build everywhere in the Netherlands? It just doesn't make sense. There are, these flood-prone areas, areas which are very close to waters and rivers, which do flood, and which we want to flood actually, to avoid worse. But it's not an area where you would want to build then. So the ministry is working on that, and they are determining where to build and where not to build, and if you build somewhere, how to build. And this is something we can really support very well as a financial sector by including this in our insurance products and saying, well, okay, if you don't want to have people building their buildings in certain areas, well, then we shouldn't cover floods in those areas on home insurance, for example. That might be a solution there. So this cooperation between private and public sector is extremely important to make our country more resilient and to prevent claims to go up to a level where we have to increase our prices to a level that is not affordable anymore.
Right. Great. João has been waiting very patiently there. And thank you again to Fidelidade, because they made the launch of the Transition Plan Guide possible at the Portuguese Pavilion at COP29, complete with egg tarts from Portuguese egg tarts. So if you go to Portugal, they're the leading insurer in Portugal. They also have business in Africa and also in Asia.
And Latin America.
And Latin America. And beside the oldest operating bookstore in Portugal, in Lisbon, they are the second oldest entity, I think, in Portugal. So they've been around for some time. João?
Yeah, and I think we are the third oldest insurance company in the world, actually.
Okay, good.
Like from 1808, so I think it's...
So they've been around for a long time. And in fact, their CEO actually was talking about present and future generations when he was talking about climate risk. But João, I think it would be good to hear. I didn't know Fidelidade much before, but it's great that you signed on to the PSI. You've joined the FIT as well, and you're really pushing a lot of things at Fidelidade.
Yeah. So thank you, Butch, and thank you, UNEP FI, for the invitation. I think talking about climate action in Fidelidade, basically we have an initiative that basically it's an aggregator of everything that we are doing that we launched this year. That is the Impact Center for Climate Change. So basically it's a knowledge center that we have launched along with, as we were discussing, academia and other public entities to study climate change, both in the mitigation angle but also on adaptation. And on that initiative, basically, it is being stemming a lot of work, namely our net zero transition plan that we launched last year, and it encompasses the whole value chain, so both operations, investments, but also underwriting. In operations, we have the objective to reduce by 50% until 2030 and be net zero in 2040. In investments, a reduction of 40% until 2030 and net zero in 2050. In underwriting, we only calculated for motor and corporates because those were the ones that we had a methodology. We are very interested in the work of Sun Life for health because we also have it, and it's not clear for us yet how to incorporate it. And on underwriting, we want to reduce 30% until 2030 and be net zero by 2050. The participation at FIT has been pivotal for us because it's always very important to understand how the industry as a whole is tackling this challenge. Obviously, CSRD brings a lot of guidelines on how to do a transition plan, but there's always specificities of our industry that are not yet considered in CSRD. Just talking a little bit on underwriting, I think it's important to say that basically our objective is to change the portfolio that we have both on motor and on corporates. And on motor, obviously, there is the electrification angle, but we truly believe that we should basically promote the driving behaviors of our clients. So are they driving better? And we have a telematics app so that any client can track the way it drives and gives indication of what was the carbon footprint of that travel. And then we reward according with the driving behaviors. So we are trying to not only consider electrification, but also other sources of benefit for our clients. On the corporate side, obviously it's more mature. We want to promote greener businesses, but I think it's something that it's transversal to all the insurance companies in the world. But although we haven't calculated in claims management, it's also something that I think there's still work to be done to understand how can we incorporate there, or how to incorporate it in a mitigation or a transition plan. We have two initiatives there. So in terms of motor insurance, we are working on to make sure that we incorporate green auto parts in the repair of the cars. Obviously, or always promoting repairs, but also when we repair, make sure that we use renewable and promote circular economy. And also on the salvage part, that is something I think it's sometimes forgotten. So we have a claim in home, in commercial. What do we do with what's left of that claim? And we have a project to promote both circular economy, but also social dimension. So these are some examples of things that we are trying to do on the insurance bit. Just to wrap up in terms of mitigation, saying that obviously we will always have some emissions, so we have set up a forestry fund to capture carbon in Portugal. Actually, forests in Portugal is a critical topic because of wildfires and everything that's related with it in Portugal. It's truly a crisis, and we think that having this forestry fund not only enables us to get some carbon credits, but mostly also to promote knowledge of how to better manage the forest, make sure that we reduce the occurrence of wildfires. I can talk a little bit on adaptation, but in terms of mitigation, this is the critical points.
Thank you. If you look at what Fidelidade has done, they have a Fidelidade Impact Center. I thought it was really impressive because they've basically created a multi-stakeholder, like a mini FIT, or like what we have, because they've engaged academia, scientific community, policymakers as well on this agenda. And I feel that the impact center that they've created is a form of manifestation of the risk manager role of the insurance industry, where it's not only there to pay losses. Yes, it is important. It's not only there to invest, but it's also there to help clients better understand and manage risks. So, and they cover adaptation, mitigation in that context. You mentioned the engagement with clients, and I think it's really important that, because in a way in the mitigation space it's newer. It's different from the traditional engagement on adaptation, where you talk about hazard, exposure, and vulnerability. Here you're talking about scopes 1, 2, and 3 emissions. And really, if the real economy were net zero, then all of finance, be it lending, investment, and insurance, will be automatically net zero, but it's not. So this agenda of engaging with clients and changing their behaviors is really absolutely key, because you don't want to simply have a paper decarbonization exercise of your portfolio without changing the real economy. So how has that client engagement look like when you talk about emissions?
Well, just to be clear, it's a very tough job because, and I think we have touched it in the last panel, just to understand a transition plan of a player in different industries, it's a huge challenge for us. Because it's very different for if we are talking about health, then oil and gas, then tourism, whatever. So what we are trying to do is make sure that our underwriters start to have knowledge on the topic. I think we need to start in terms of education internally. And this knowledge cannot be closed in the sustainability division, because we will not change the way the company operates. But engagement with the clients has been actually fruitful, because most of them, at least the big players in Portugal, all of them are worried about this topic in all the industries. Maybe because of CSRD also, because it brings light to the topic. But I think our biggest challenge, and something that we think about a lot, is how to deal with SMEs. Because one thing is to deal with the large corporates, not that it's easy, but it's certainly easier. Most of them have a transition plan we can assess. But when we talk about SMEs, and Portugal, 98% of the companies are SMEs, how should we deal with them? Should we ask for a carbon footprint? Do they have the knowledge, the capacity to calculate it? Should we help them on those processes? So this is the discussion that we are undergoing. We know that we also need the SMEs to be net zero. And in our case, it's a large portion of our portfolio. But we are involved in some associations with other companies in Portugal to see how can we, as a group, not only insurance companies, but as a group, because if I am an utility company, I also need my clients to be net zero. So how can we, as an association of large companies, bring a tool for any SMEs to start this journey? Because we can't only impose things. It will not occur for sure in a profitable way for us and for our other peers.
Great point on that, because not everyone has simply listed companies as their insured clients. So it's an interesting discussion because if you look at the Global South, most of the economies are dominated by SMEs, but even Northern Europe, Germany and Italy are dominated by SMEs as well. So I think it's relevant in many jurisdictions across the world. I see that we have 14 minutes and 25 seconds left. So I want to be sure that we get to check in with you before we close later on. Any question from the floor for our distinguished panel? There's a couple of hands at the back. Great. Your name and organization, please.
Yeah, my name is Ziki Nganunu from Bright Insurance Company in Southern Africa. So, yeah, in terms of climate action by the insurance industry, I think obviously globally, and we've had many good examples from the panel of what they're doing and throughout the conference, but I think it's very different in different parts of the world. I think, particularly from the region I'm from and maybe other parts of Africa, got a very long way to go, quite far behind, and some of the initiatives that João has mentioned is good ideas. So my question is really how do we motivate and put this more on the agenda in some of those countries that maybe smaller countries in developing world that are not here today and perhaps missing out on where this is going.
Any thoughts from you? I'll share some thoughts later, but...
Yeah. I can start. So we are present in 13 countries, and 3 of them are in Africa, and 4 of them are in South America. And when I said that we set up a net zero transition plan, some parts of that transition plan are still not applicable to some of the geographies because it's very tough to impose something to some of the geographies, and probably it's not even the priority on that country. If I'm in Mozambique, one of the poorest countries in the world, and we are present there, should I talk about electrification of the motor portfolio? Does it make sense even? So what we did was we created a group-wide plan, and what we are doing actually in 2025 is working with each geography specifically to adapt this to that reality. But before this year we started with a training, so we have, let's say, focal points in all the countries. So we in Portugal are the corporate team of sustainability, but we have people in all the geographies that are starting to get knowledge about the topic. This is not so talked about in some geographies that we are in, as in Europe. But we will need to adapt. We'll need to see how to incorporate it. And the social dimension that sometimes it's forgotten on this just transition, it needs to be just. And in Africa, in South America, this is even more important than probably in Europe. So that's the job that we want to do during the next year to make sure we adapt the plans for each geography.
Yeah, and just to add a life and health perspective, so again, similar to what you've just outlined, we have our corporate approach, but we've been doing a lot of work to build capacity across our business, and what we really find lands is to really understand what those focus and priority areas are in those specific countries. So from a very high level, from a health perspective, we know that in our Asia countries, they are going to be more heavily affected by vector-borne diseases, as an example, compared to, wildfires, air pollution, cardiovascular disease, diabetes, respiratory in North America. And so we really have a targeted, focused approach in terms of what those direct impacts are going to be, and then to really tell stories in terms of how we're seeing that manifest right now in those particular areas. Because going to your point about people, ultimately it's how is this affecting people on the ground, and we find that really resonates when we're trying to build that knowledge and capacity across the organisation. And it's not easy, it's a long journey, but I think it's being able to put that at the hearts of those people who are actually on the ground in those countries, so they can really understand those areas of risk and impact.
Thank you. Sorry.
Sorry. Thank you for that great question. You're absolutely right. There are big differences between the countries. As a.s.r, we only operate in the Netherlands, so I can't comment on worldwide enterprises. But what we're seeing, and I think that's the same in Africa and worldwide, is that there is an energy transition going on everywhere. Even without us, it's going on anyway. I think it's vitally important that we as insurance companies do our utmost to make those new renewable energy solutions and technologies and companies operating in those sectors insurable. It's something we do at a.s.r. We've set up a sustainability desk where our intermediaries can report new renewable energy technologies and companies to us, and then we liaise, just like Sun Life does, with research institutions and specialists on similar technologies to see whether we can make that insurable. And I think that's very important to, as a means of making that transition to a net zero economy, to make the new risks insurable, and it's also important to us, as you know, we have an added value as an insurance company because we carry risks, and if we want to remain having that added value to our customers who are in a transition, we need to insure those new risks for them.
Yes, and just to add on that, on the transition plan guide that we showed earlier, we have taken that into account, meaning there has to be special consideration for certain insurers which only write SMEs, those who are domiciled in developing countries, and those who write personal lines only, as examples of what I remember from the guide. So that's one thing. And then the other answer, Ziki, is this is frankly why global initiatives also exist, like the UN Principles for Stable Insurance and the Forum for Insurance Transition to Net Zero. We have African Risk Capacity, we have the MIBRI, we have ICEA Lion, and others in Africa, so that there is also an efficient way to understand and assimilate emerging practices across the globe. Yeah.
Hi. Yes, I'm Giorgio Parlato. I'm a PhD student at the Stockholm Resilience Center. I haven't worked directly with the insurance industry, so maybe this question is a little bit naive. But I find the industry super interesting because it's obviously exposed to many of the physical risks from climate change. So potentially, I see the potential of the industry sort of implementing a carbon tax included in the premium for underwriting insurance to industries who are heavily emitters of emissions, right? But then on the other side, I see that potentially the competition among companies prevents that, right? Because if your company starts charging higher for certain industries, then obviously those companies will go to other insurance providers. So I was just curious to hear a bit more about that. Where is that something that's been discussed in the industry? Is PSI a platform for companies to collaborate and coordinate to sort of, because it seems to be very much in the financial interest of insurance companies to charge higher to high-emitting companies because that's creating so much financial risk for you. So can you talk a bit more about that?
Yes. Sure, yeah. Well, actually, you touched a very good point, carbon pricing. And is there any mention of this in the industry? Definitely, the CSRD is already, has already incorporated this into the regulation. So in the ESRS E1, there's actually, one of the subtopics is carbon pricing. So it's definitely something we need to look at. Are we as far as really pricing in carbon? No, it's a very challenging subject. We're looking into it, but this is a difficult one if it comes to just transition. We see that climate change is affecting the more, say, how do you say it?
Vulnerable?
Thank you. Vulnerable groups. And also what we're seeing is that if you look at transition measures such as solar panels and heat pumps, etc., it's much more accessible to the more wealthy people. So if you start thinking about carbon pricing and actually price in high emitting measures or sectors or people who have houses that are high, emitting more, then you easily touch on the more vulnerable groups. So this is a dilemma we're dealing with and trying to figure out how we can go about that. But I know that definitely in this industry discussions are going about, can we price in carbon in the future?
Yeah, just to very good question, and obviously it's something that we all are discussing internally. So in terms of carbon pricing, at least in Fidelidade, we started with operations. So for scope 1, 2, and business travel from scope 3, we defined a €100, let's say, internal carbon price, and we commit ourselves to, starting next year, to invest this equivalent amount in our forestry fund for the years to come. But when you enter in underwriting, it's a much tougher discussion, and obviously the first one to implement this type of differentiation might have commercial implications, and it's something that we need to consider. We haven't decided what to do, but obviously we can always try to go in a positive direction and benefit the ones that have lower emissions, and especially the ones that are reducing emissions, because that is the more than only benefiting the ones that have low emissions. What you want to do is to make the reduction in itself substantial. So that's probably the one that we will benefit more. But we are not yet including it in our pricing, although we are discussing it, especially on the motor insurance, where it's easier. The topic that it was mentioned is the difficult one, is the social, the just transition I was mentioning. Because if you are penalizing people that not have electric cars, it's for sure you are penalizing poor population. Does it make sense? Probably not. So how can we make sure that we make the transition as just as possible?
Thank you. And this is why one of the main narratives of the transition plan guide is a just transition to a resilient net zero economy, meaning it's too narrow to simply look at net zero on its own in isolation. We need to consider resilience along the way and also a socially just transition. But it's easier said than done, as I keep on saying, but I think it's a really good question. The net zero insurance journey for insurers is relatively newer compared to banks and investors. But it's something that I think, as they have mentioned there, insurers are starting to think about in terms of what could that transition look like in an insurance context. Yes. We had Tomas Soleil from Costa Rica earlier, and I think we have our colleague from based in Berlin.
Thank you. Thank you for those grateful discussions. You are highlighting the topic that are in the concerns of our as supervisors of insurance. I want to make a little comment. In Costa Rica, we launched our taxonomy, green taxonomy, last August. We are beginning the process of piloting next year, and we are beginning with the sector, thanks to UNEP FI and the Green Fund and European Commission, because they support our project, and we are asking them to begin in the nature taxonomy also, in order to have a better disclosure in the country. And I'm just receiving in my phone, because all those posting in LinkedIn, a message from an entity that I supervise in Costa Rica, a little worry about what are you learning now to came to our market and put new requirements for the market. My market is an emergence, is small, and of course this is a concern of the supervisor, how to balance the reporting and how to put inside, that is my personal perspective, inside the risk-based supervision that we have the main front about that, how to put that in the chief risk officer, the responsibility, the corporate governance, the direct responsibility of the boards, and how balance the requirements of reporting and the necessity of amplifying our insurance sector, because we have a protection gap of 98% for large events, climate events. And that is just a comment, but I would really appreciate some feedback.
Great. Quick comment, and then Juan, we'll end with you, and then because we're out of time, yeah?
Oh, just in terms of the reporting and let's say the change of the operation in the company, it's something that I discuss internally a lot. Imagine I'm the head of sustainability team, and half of my team is entering CSRD currently, and it will be the same in next month because it's so difficult to answer. And sometimes I wonder, could it be simpler so that we could have more time to change? Probably yes. However, I think it's good for us all in Europe to have the same framework to report on. I think that is good, and to have something to use. But yes, I think there should be a balance so that we can spend time on the change in itself. And currently I'm feeling that I'm not being able to do it as I would like.
A quick one, if we may, and then we'll end with that. Sorry. Yeah.
I just wanted to add on to João with a word of advice. And I'm so glad that you actually put this up, Thomas, because indeed it is a lot of work, but it's also worth our while, I think. The whole CSRD and other regulations also help us a lot to actually get it across the company and say, well, it's regulation, we have to do this. It really helps. But it's a lot, like you said, finding the balance is a thing. And what I wanted to give you as a word of advice really is that, you know, it's not all about risk, and I would like to emphasize that I think it would be very good for supervisory bodies to keep in mind that risk through a transmission channel actually also leads to mitigating risk, leads to a positive impact and a net zero transition. So if we all keep that in mind, then regulation is fine really, because we will get there in the end. But it's, I think, important to keep that in mind when asking for risk mitigation, that the actual goal, ambition should be that net zero, resilient, nature positive, social economy.
Okay, and a very quick one to end.
So it's very much along the same lines, and I doubt if this is a quick one, but I consult a lot of insurance companies, Europe and otherwise, outside on this topic. And where I'm stuck right now is to actually show the business case, show the value of why we need to actually think beyond net zero, why we need to bring nature or biodiversity into the conversation at all. Social justice is far from the conversation realistically. So kudos to you that you talked about all these topics within your insurance company, but for a lot of the players in the real-time market, I see them being very much based on the ESRS E1 dimension right now, and not a lot are moving ahead of that curve. And my question, it can't be very quick, but how do you move the needle on that? What kind of conversation are you starting with the supervisory boards, the board of management, to actually emphasize why this is the time before there's regulation on this topic? There's only regulation on certain topics. How do we move meanwhile, or do we wait another 4 years for that regulation to come up?
Can I comment again? Sorry. Well, yes, you're right. We actually started talking about other topics than climate change before regulation kicked in. And I think that the reason why that worked within our company is, apart from a very intrinsic motivation from our CEO and our board of our management board, is also that we all realize that all these themes are very interconnected. And and there will be no climate change abatement if we don't enhance nature. If nature is a very important topic, and nature has a very important role to play to actually stop climate change. And that interconnectedness, same with circular economy, if we don't have a circular economy, we won't win this battle on climate change. So the interconnectivity between those three themes has really helped us as a sustainability team to get across in our organization that we really need to focus on all those themes instead of just climate change only. So that would be my tip for today.
Thank you. And with that, if there's anything that I can add, I think it's simply to say, if in all of my experience with UNEP and all of these voluntary initiatives, the ones who benefit the most are those who are part of the work. And so the simple answer to your question probably is it's probably cheaper. If do your homework now, then wait for regulation to come in later on and adjust your model. All right. Thank you so much. And